We've got Vivek Mavani, who is an independent market analyst and portfolio manager, who joins us right now in the studio. Vivek, clearly, I think the expectation in terms of what the finance ministry will announce is more from the currency markets and the fixed income markets, but also equities, no doubt, looking to see what the finance minister will do. What are you all expecting?
Well, two, three things that are related to both currency and equities. I mean, not that one can separate one from the other. Some sort of measures have been, I mean, it's logical for one to expect. I mean, you have almost a 22% or 23% decline in the currency in a matter of few months, and no measures from either government or the central bank. Two, three things, even if it is more to do with the currency in terms of opening up the bigger window for NRI investments or issuing some sort of bonds or whatever, what has been speculated or discussed in the media in the last couple of weeks or few weeks. It does have an impact on the equity markets because the FII flows which have got scared because of the volatility on the currency, one can logically have some hope or expectation of some sort of FII flows resuming. That's one thing that I would take to be positive. I mean, the FII flows which have almost dried up in the last couple of months, some sort of coming back over there, which will also lead to which would also result in some impetus to the currency as well. So that is what I would await and see as to what the finance ministry has to say or announce today. Yeah, it's eagerly waited.
Okay, and Vivek, what would be your view on select banking stocks?
As far as the banking is concerned, enough has been discussed and dissected about the asset quality. But my personal sense is that as far as the price damage is concerned, especially on the PSU bank space, among the tier 1 banks like say a Punjab National Bank or a Bank of Baroda, and including SBI, as a matter of fact, although SBI in the fourth quarter was a positive surprise. My sense is the price erosion or price damage largely is done. The asset quality concerns may probably continue for a couple of more quarters, but we may not see significant further price damage from here. So my sense is a bottoming out process in terms of some of these individual banking stocks is concerned, including, I would sense, the Bank Nifty in the whereabouts of 9,500 range. My sense is a bottoming out process has already happened, and from here selectively I think is time to be bottom fishing in better quality banks, tier 1 banks, both on the private and the public space.
Speaking of bottom fishing, then Vivek, what would be your view on the power sector? Because there's been so much policy uncertainty in light of this, but you have some of the analysts who believe that perhaps in FY13, FY14, there will be more clarity on the same, and you can look to buy some of these counters now. Would you agree?
I would agree from only partly, although not fully. Partly because in terms of valuations, yes, they have been beaten down almost to the levels that as if 2 years down the line, most of these companies may probably not exist. I mean, that is what some of the private power companies have gone down to. But what is going to take it up after beaten down valuations or beaten down stock prices is some sort of policy measures. Yes, we are awaiting, but equity markets or investors seem to be losing out the patience, and hence we have the prices what they are. I would take a call as to what really is the solution to the power sector woes, partly on SEB financials, partly on the input linkages, and so on and so forth. So until we have some concrete measures on these two fronts, I think it will still be too early to be positive.
So Vivek, let's nail it down to some individual names in the mid-cap space. Which are the stocks that you'd be betting on?
Well, in the mid-cap names, I would continue to be looking at specific opportunities, say an Astral Polytech or a Bata. I've been bullish on Bata for a very long time, continue to be bullish in that space. Or I would look at some of the private financials, basically the NBFC space, say a Mahindra Finance or a Bajaj Finance. So I would look at some pockets within that, say in the oil and gas space, a Petronet, LNG, and so on and so forth. So in every sector, one can find one or two companies which one can be positive about, taking a slightly longer extended horizon, because given the a huge amount of policy uncertainty in the near term. When I say uncertainties, we are waiting for things to happen, but we are just waiting. So it is from that perspective that take a slightly longer term view, and a lot of these stocks are fairly promising.
Right. Vivek, also a quick word on the IT pack, because, just taking this back to the rupee focus, the rupee had fallen quite a bit. It's come back, and, the expectation is that if you have some solid measures coming from the finance ministry and the RBI, the rupee could appreciate further. How would you view IT stocks in that light?
Well, I'm positive on IT, especially the tier 1. When I refer to tier 1, basically I'm referring to TCS and an HCL Tech, selectively one also on Infosys. 2-3 things. I mean, we have had a huge currency depreciation of almost 20% in the last 1 year, but we haven't seen the same getting reflected adequately in the stock prices of the IT companies who are actually the direct beneficiaries. Okay, individually one may say there are concerns in Wipro, there are concerns in Infosys, but well, in TCS one is hard pressed to find what are the serious concerns that one is talking about. I mean, is it the concerns in Infosys which is rubbing negatively on TCS? Well, I'm not willing to buy that argument in that sense. The same goes with HCL Tech. So these are the two stocks that I would be bullish on. Again, take a slightly extended view, and I would stick my neck out at this point of time.